So, Prime Minister Mark Carney's first federal budget is just 1 month away. And according to the interim parliamentary budget officer, the deficit numbers are shaping up to be ugly. At a parliamentary committee last week, our interim parliamentary budget officer Jason Jacks issued a dire warning. And I tell you folks, this guy is something special. Just watch.
We project the budgetary deficit will be $68.5 billion. That's billion with a B. We project the federal debt to GDP ratio will be 42.5% of GDP this year.
How alarming is that for the average Canadian, for the taxpayer? Because there is only one taxpayer, right?
Stupefying, shocking, right? This is not, it's not a funny fiscal outlook. It's a really serious fiscal outlook.
Are we closer to where we were in the mid-90s than we were 10 years ago?
The numbers in the mid-90s were far more alarming. If we don't change things, we're going to end up there again.
When do you project the budget to be balanced?
Is that a trick question? a very long time. Again, the current status quo is not sustainable.
Well, as Jakes mentioned there, the PBO projects the deficit will jump to $68.5 billion next year, and it will stay above $60 billion for several years to come. That would be enough to change one of Canada's key so-called fiscal anchors, the debt to GDP ratio. Now, the Trudeau Liberals were committed to keeping the size of Canada's debt compared to the size of the economy in decline in the medium term. But under the PBO's projection, that ratio will rise above 43%.
Can you believe that guy? He is our interim parliamentary budget officer, and this guy acts like he sits in a pub with his friends and talks about how restricted the list of tap beer is. Are you flipping kidding me? I know PPO is supposed to be bipartisan or apolitical, if you will. But if you look how Poilievre, Mr. MAGA Maple, talks about Jason Jacks, and the interactions between Jason Jacks and his friends at the imaginary pub table at the parliamentary committee, his level of bipartisanship starts to concern me. He talks about our budget. For fuck's sakes, and they are smiling and joking like, is this a trick question? Okay, let's take a look what a real economist has to say about this performance and the real situation our budget is in. But before we get into this, a new report from Deloitte suggests our economy hit a low point during this year's second quarter. But growth has been picked up. According to the report, Canada is expected to avoid a technical recession and will cap 2025 off with just over 1% of GDP growth. The report states that sector-specific tariffs will continue to impact manufacturing, and its forecasts are gradually recovering in the housing market. And how does Mr. Kevin Page, a former parliamentary budget officer and president of the Institute of Fiscal Studies and Democracy, feels about Jason Jacks' description that our fiscal situation is stupefying and not sustainable? Well, he said, I don't agree with those words. Take a listen.
Parliamentary Budget Officer and President of the Institute of Fiscal Studies and Democracy. Kevin Page, always good to see you. Thank you for coming in, sir.
Good to be with you.
We're not going to see the federal budget for another month, but there's a lot of firm opinions on it well in advance. How fair is the PBO's assessment that the fiscal situation is stupefying and not sustainable?
Yeah, I don't agree with those words. The deficit definitely is going up from 2024-25. I think that the numbers that were in the PBO document are probably close to what the Prime Minister will see as his baseline, the Minister of Finance. So it is a higher deficit than we've seen in a while. But it's you put the deficit and debt in perspective. It's we're not in a bad place with respect to other countries. With respect to our credit rating, we're actually in a pretty good place.
And how does he think about the budget is not sustainable?
Yeah, so I think we need to see the budget, and we'll see the Minister of Finance, the Prime Minister's, the measures. There'll be some version of what we saw in the platform, so it'll be a higher deficit track going out. I think like the definition that economists, bond raters use for sustainability is usually looking at the debt of the country, the accumulated deficit, and relative to the size of the economy. So what we see over the medium term right now in terms of this baseline is a very modest increase in the debt to GDP ratio, then it stabilizes. I think the analysis that we've seen from finance, from the PBO, from IMF last year is that Canada is fiscally sustainable. I don't think that's going to change when we see the numbers from Prime Minister Carney and Minister Sheinbaum.
Okay. Let's see how much change to the budget Mr. Page expects over the next 4 weeks, when Carney will release his federal budget.
Yeah, I think, we're going to see a first installment of the spending review package in the budget. And, so they've been working, the government department's been working on over the summertime. We'll see, preliminary, measures. I think in the platform, they talked about getting $30 billion over 4 years. I think with this, with a weaker economy and with the NATO commitments and the commitment to get to an operating balance in 4 years, they're going to need to do more spending cuts, some more reallocation. And, we'll see some of that in this budget, but we'll see it in future budgets as well. It's not an environment to raise taxes, so the Prime Minister, Finance Minister are going to work hard to cut spending.
Well, they've already.
And of course, Mr. Mega Maple Poilievre uses his favorite word at any opportunity he has. Tax cuts, tax cuts, tax cuts. Okay, let's see where tax cuts fits into the budget.
The Prime Minister, Finance Minister are going to work hard to cut spending.
Well, they've already cut a bunch of taxes this year too, right? Income tax, capital gains inclusion, and digital services tax, amongst others. But
there is a lot of opposition talk, especially by Mr. Mega Maple Poilievre, about our AAA credit rating. It may be at risk because of how the budget is right now. And what should we think about that? Is Poilievre right? And what about the, in my opinion, despicable way Jason Jacks talks about our current budget situation?
Well, I think the language from the current Parliamentary Budget Officer, Mr. Jason Jacks, is just wrong. And he should walk that back, quite frankly. He should he should tell people that our fiscal situation is sustainable. And I think that the other language of those other words, stupefy, shocking. It's not you wouldn't see a governor of the Bank of Canada or the Auditor General use that kind of language. So I think that's not the right language. And so I'm sure Mr. Jacks will change. We'll see less of that kind of language. I think it's definitely inflamed certain passions around Canada's fiscal situation that I think are not consistent with the numbers.
Right.
So how is our Canadian deficit really doing? Perhaps we should make Mr. Mega Maple Poilievre and Jason Jacks listen into the next clip.
Martin, again, if you look at the numbers right now, a deficit, a baseline deficit of about a little over 2 percentage points. That's a third of what it is in the U.S. and the UK, and it's well below the OECD average. If you look at our deficit, our debt, debt to GDP ratio, we're probably it'll be the lowest of the G7. If you look at the carrying costs of debt, interest charges divided by revenues, it's 11 cents on every revenue dollar right now. That is a third of what it was for Prime Minister Chrétien and Martin, and we're a AAA country. So, where do you see, shocking? It's not shocking to see a deficit go up because the economy is slowing and we have NATO commitments. To me, it's sustainable. I think when they do the analysis, everybody's going to do this analysis, including finance. We'll see it in the budget. We're sustainable right now.
On a personal note, I really have no clue why Mark Carney appointed this Jason Jacks guy as our new interim PMO. Let's hear what Mr. Page has to say about how Jason Jacks should deal with his misrepresentation of our current budget.
They said.
I think they recognize it's a mistake, and I think that's the easy part. I think the part of kind of walking it back, I think that'll be good for the institution. I think they have to walk it back.
I think there's good reason for Canadians to feel a bit more hopeful about where our economy is heading, especially as we look towards 2026. Things have been tough, and they will likely stay that way for a little bit longer. But there are signs we might be turning a corner. The July numbers came in, showing growth for the first time in 3 months. Not huge, but definitely a step in the right direction. The reasons for my optimism is the interest rates have started to come down. There's even talk of another small cut, about 25 basis points. Lower rates make it cheaper to borrow, which usually encourages people and businesses to spend and invest more, giving the economy a bit of extra energy. Trade is another bright spot. Exports have struggled recently, but the Canada-US-Mexico Free Trade Agreement continues to keep most goods moving across border without heavy tariffs. That's a big advantage for our exporters. Even though a few tariffs, like on steel and aluminum, are still around. Canada's overall tariff rate remains much lower than most other countries. Keep us competitive. The government's plan to boost infrastructure spending is also a great hope, investing in roads, bridges, and transport networks. Not only does this create jobs, it also helps businesses to move goods more effective. And if we can finally reduce inter-provincial trade barriers, those rules that make it harder for provinces to trade with each other, we could unlock even more economic potential. Yes, challenges remains, but lower rates, improving trade conditions and stronger infrastructure investment are all good reasons to feel cautiously optimistic. Step by step, Canada's economy seems to be finding a new footage again. And you know, the talks about trade diversification? Mark Carney is already doing that. Just look at the deals with European countries, the UK, India, and Indonesia, and so forth. That's going to take time and money, but with this infrastructure in place, it will be so much easier to move goods effectively to other countries. But the idea of Canada broadening its trade relationships is an encouraging one. All in all, I think 2026 looks a little bit brighter than it has ever been lately. Between easing inflation, lower rates, and renewable attention on infrastructure and trade, there's room for cautious optimism. It's not about booming growth or wild expansions, more like steady, healthy progress in the right direction. So, as you can see, all is not lost. Not by a long shot. Don't pay too much attention to the demagogic of the right-wing politicians and media. As I said in some of my earlier videos, the opposition led by Polyev does not have a clue. All they do is being against flippin' everything. They don't have to prove a single bit. They're just flapping their mouth. So please, let me know in the comments below how you feel about our current fiscal situation. And in the meantime, continue the boycott. You do it for your own good and for the good of the country we all love. And please let every Canadian know that their choices matter. And if you want to support this channel, please like, subscribe, and turn on notifications. Thanks for watching, and thank you for your passion. Till next time, I am Wilfried Lemkuller from Europe Curious.
We were petrified, kept thinking we could never live without you by our side. And we spent so many nights thinking how you did us wrong. Now we've banded all together. Your tariff made us strong, and so you know you're not so great. There's not a snowball's chance in hell will be your 51st state. We really need our resources far more than we need you, so now just go. Walk out the door. first state my fucking ass. Go on, Canada.